I'm here with Mark Higgins. You are an investment advisor at Index Fund Advisors. You have written a book here. You're a book author, and you've written this book titled Investing in U.S. Financial History, Understanding the Past to Forecast the Future. What period from the past compares most closely with the one that we're living in right now?
The most relevant point of comparison now is the late 1960s and 1970s, because one of the mistakes that the Fed made, and believe me, they're aware of it, they reference it not specifically outright, but you can see it in the language in their minutes, in their public statements. One of the big mistakes at that time was the Fed tightened monetary policy but backed off too early. And that is what allowed higher inflation expectations to set in. The Fed lost their credibility, and that led to the Great Inflation of 1965 to 1982. So now that inflation has gone on for almost 3 years after COVID, that is really the event that the Fed is most concerned with. And I've been writing quite a bit about that. That's why I've been convinced that the Fed's going to remain tight for longer than people think.